All right, boys and girls, it's been that kind of a day on the markets. Yeah, that kind of a day indeed. A little up, a little down. I kind of felt like I should play the song today, right? The Blood, Sweat, and Tears song.
What goes up must come down.
And keep going down, apparently. Amanda Lang is on the line, BNN Bloomberg anchor. Amanda, we spoke only a couple of days ago. As bad as things were Thursday and Friday, you thought, okay, it's going to be a weekend, we take a break. But we forgot apparently to take into account the fact that Asian markets, which were closed, I guess, on Friday, would react to the Trump tariffs. We're seeing that today. But today's been different as well because we had a bounce back at one point when I guess one person in the Trump administration suggested the president might in fact decide on a 90-day window to delay all these tariffs. That turned out not to be the case, and we've fallen all the way back down again. Or not all the way, but down again.
I mean, I think what markets are telling us today, Aaron, is that there's a bit of resiliency here and that the tariffs, as bad as they are and as devastating economically as they are, there is a way to kind of price in the impact of them. And at the moment, markets are pretty flat, actually. The broad S&P 500 is it's negative, but it's just barely negative. The NASDAQ, same. And some big names like Amazon and NVIDIA and Shopify are actually gaining significantly today, 3%. So it's beginning to me to feel like a market where you're going to start to see people finding bargains and starting to buy. This is the greed factor. We saw fear last week. Now you get the greed coming in. That says that it's not as devastating at the moment as we thought it could be. We thought it could continue down, 4 or 5% a day endlessly, but there seems to be a bottom here.
So I'm looking at the Dow as we speak. The Dow's down 500 points, 496 points right now. It was down, I think, at one point today, 12 or 1,300 points. So you're right, it has come back. I'm wondering, though, is this one of those markets, Amanda, do you get the sense that every time the president says anything about tariffs, we're going to have a wild swing in markets?
I don't think so. And I'll tell you, a few years ago, I decided somewhat arbitrarily that unless the market moved more than 3%, I wasn't paying attention to it because the markets move so much day by day that the Dow is currently down 1.3%. That's nothing. That's a regular Monday. So I'm not when I look at the market screen in front of me right now, this is not a devastating market. This is not terrible. Now, we've seen big declines. Stocks are way down from where they were a week ago. But we may have leveled off here, and this is kind of within the realm of reasonable volatility. Will there be continue to be volatility? Oh, yeah. And that's the problem, of course. And this is why we keep saying this, but it's worth repeating. Don't try to ride in and out of these kinds of trading days. Unless there's some reason you need your money today, and God bless you if you do, leave it alone because these days can swing so wildly and you'll buy or sell at the exact wrong time. Yeah. You want the markets to settle.
I would ask the one other thing I'm trying to understand here. We had the comparison last week to the worst market since COVID. I think we talked about the fact that back in 08, 09, we're comparing it to then as well.
Yeah.
Those were events that we understood. I mean, to some degree anyway, right? Maybe COVID not as much as we thought we would for how long it would continue to roil markets. That market came back. 08, 09 came back. Is this, to your reference of a blip, is this a blip on the calendar? Do we, in a month or 2 months from now, does this all go away?
It really depends on what happens next. So if you believe, as I'm inclined to, that there will be a reshaping of world trade, the world trade order is the old one's over. The U.S. wants a new deal with everybody, but it's not going to be 34% tariffs on China. It just isn't. It might be, though, 11%. Canada might face new across-the-board tariffs in a new trade deal that are more like 5%. Whatever those are, we can live with them once we know what they are. So I do think, Trump keeps saying this isn't just a negotiating tactic. I believe him when he says that, and yet I do think this is still steps in the process towards a goal. And the goal surely isn't just to create a global recession, which is, if you keep doing what you're doing here, that's where you're going to land.
But whether it's the goal or not, there are too many people now suggesting, based on what we already know, unless things change dramatically, we will end up in a recession.
We certainly could, but that depends. Again, duration is everything. So if this sort of resolves itself in a matter of weeks, we will have permanently taken growth away. I mean, remember, every day that something doesn't trade or move or get sold, that doesn't happen later. And so that's in some cases. And so that's a damage that's being done, and that's irrevocable. However, if this is over and we come to some kind of new sort of round of negotiations, then we get back to some kind of normal flow of business. Economies can right themselves. It doesn't have to be devastating. This could be, yes, we're going to feel pain, and I think Canada's probably heading for some for some contraction, if not a full couple of quarters, at least the next quarter. But hopefully, my hope is that this ends and that we move into a new phase where we're renegotiating trade and we can start to kind of get back to business. Even if it's more expensive, at least we're still conducting business. Right now, everybody's sort of paralyzed. Yeah. And that's the worst.
So let me ask a dumb question here. We found out since the tariffs and the board that Howard Lutnick handed to Donald Trump on the lawn when he was going through all these countries, it turns out we now know that had nothing to do with what we call specifically tariffs, right?
No.
It had to do with trade deficits versus trade surplus divided by whatever you want that formula to be, but it was not about tariffs, right. Which I think to some degree begs the question, what's the ultimate goal here, do you think, for Donald Trump? If it's not really about you're charging us this much, or we're going to charge you that much back. I try to understand in my own mind just Canada's situation, right? We're a country of approximately 40 million people. The U.S. is about 350, 380, whatever million people. There is always going to be a trade deficit because we are just 1/10 the size of them. We're not buying as much of them as they would be. How does that ever get solved? What's the end game here?
So I think you're right to say it's not about it's not about tariffs or countervailing. I mean, Canada's one. By the way, if you include services exports, the U.S. has a surplus with the world. I think only Australia it doesn't have a surplus with. So it's not as though they're hurting in general. And an even better example than Canada is Madagascar. Madagascar is a tiny country that does very poor, but it has a lot of vanilla. And so it has a huge trade deficit with the U.S. has a trade deficit with Madagascar because Madagascar sends its vanilla and the U.S. sends its money. That's it. That's how that works. By the way, vanilla prices are going to go up. But it doesn't make any sense to punish them for that. It's the only place you can get vanilla, or one of the only places. There's no logic in it, Aaron. To your point, I think we're trying to figure out kind of what the path is here, and but that billboard alone tells you that there's some kind of chicanery going on, and it's sort of nonsense, which doesn't help us feel confident or assured about what's going to happen. That's the problem. What we do know is they want a new deal. Now, I suspect China is their biggest target, and rightly so. China is the biggest offender on this stuff in the world. That's just a fact. And maybe if they can get China to heal, they leave the rest of the world alone. But I don't think so. I really do think they want to change the deal. But
you saw the note today on China. So China imposes 34% tariffs, I think it was, after the U.S. ones. Plus, you mentioned this, I think, on Friday, export controls, which is a pretty big deal. And then today, Donald Trump says, okay, if you're going to retaliate, I'm going to impose another 50% tariff on China. I think that brings us over 100%, doesn't it?
I mean, it doesn't make any sense. And of course, this is the old blazing saddles, stop or I'll shoot with the gun pointed at your own head. This is the problem with trade wars. You can raise tariffs and you're just hurting yourself. The Walmarts of the world that are Best Buys that import so much from China are just going to get even more hurt. The escalation in some ways forces a negotiation, right? That can't continue. But you also can live and suffer under tariffs. Ask our canola farmers who are already doing it. Pork producers. We were suffering with China too right now. So the escalation in some ways makes me confident that they're going to have to resolve it because it's too painful.
Okay. Last thing, did you happen to see Howard Lutnick on national TV and the U.S. TV this weekend?
I heard a lot about it. I didn't watch it.
You need to hear this clip, and then we're going to have to wrap it up. So he's talking, part of the idea here, right, is to bring, and I think Donald Trump has said as much, good jobs back to America, right? Well, here's the reference to those good jobs from the Commerce Secretary. This is Howard Lutnick.
So it's not the tariffs. It has nothing to do with tariffs. If they went to 0-0, they would go to $200 billion with us. We need to stop the ripoff, and 0-0 is the way to
I know,
make
but we don't have 0-0, sir.
We
don't have 0-0, actually, because when we saw the president stand in the Rose Garden holding up that chart that you helped make, that wasn't actually tariffs. That was actually confusing to investors because it was some kind of other formula, and the countries themselves seemed kind of random. Like, why are the Heard and McDonald Islands, which don't export to the United States and are quite literally inhabited by penguins, why do they face a 10% tariffs? Did you use AI to generate this?
No.
Now, that's not the clip I wanted to play, but I thought that was worth hearing anyway. The clip I wanted was when he said about all these jobs coming back to America, Amanda, where, people would be sitting in plants like Apple iPhones, the ones that have been made, of course, in China. Americans would be sitting there putting the tiny screws in the phones to finish them. And I thought, there's a real high-quality job. Jobs that are probably going to be taken by robots anyway. That didn't make any sense either.
No, and that's sort of the part of it that really is troublesome. They're promising manufacturing jobs that simply don't exist. If Apple has to spend years and hundreds of billions, which is what it'll cost, building plants in America, they will fully automate the screws into the phones. They will not have human beings doing that. There will be some jobs for humans, but that will be also more expensive, and it means your iPhone will be $3,000. So at the end of the day, the jobs that they're picturing, which is our grandfather's jobs, the good manufacturing jobs that used to be middle class, upper middle class jobs, they're simply gone. And if you want a robust economy, what you want is to have a versatile, educated workforce that can pivot to new things and invest in new technologies and grow new jobs. Because that's, wishing for the past is not very helpful.
And that's where we have to leave it. Amanda, as always, I thank you so much. I really appreciate it.
Great to talk.